welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for the Big Three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Don Kaufman over at Theo Trade. Good to see you both. Don, how are you feeling about the market? We saw some new highs across the board over the last couple of days. Now what between now and the end of the year?
Yeah, although we're seeing some new highs right now, what I'm watching are some of the rotations. So for the most part today, you're seeing a lot come out of some of the big tech companies and into financials still, and into, of course, some of the small caps. Nevertheless, let's look for correlation to possibly pick up to the downside. One of the things that's really nerve-wracking on a day like today is, you have a market today that's down. Obviously, we're going into the holiday kind of weekend. We're open portion of the day on Friday, but what if we actually start to see these financials, see some sell side activity along with ultimately tech, in which case you would have some fairly significant down days.
I see. All right. So now we're looking at your first trade here, Emerging Markets ETF, EEM. Tell me a little bit about this. It hit a high of 47, so it sort of was in this channel for a long time, trending higher, popped up, but now what?
Yeah, the first thing obviously to recognize is that the emerging markets, the EEM, this particular ETF has a lot of exposure specifically to Asia, China in particular as well. This is down right now in accordance with an incredibly strong dollar. So one of the things that you want to think about is if you think that the dollar might reverse, might see some sell side activity, it might behoove you to actually take somewhat of a bullish trade. So I'm actually taking a little bit of a standoffish position on EEM. I am bullish. I think that a significant rally could actually play out, but I'm actually going to put on a back spread to where even if I'm wrong, I'm not going to lose anything. And if I'm right, it could be a nice profitable trade. But this trade is out to the January 17th expiration. And what I'm going to do in this back spread is I'm actually selling one of the 4350 calls. Again, sell one contract of the 4350 calls. Then I'm going to turn around and buy two contracts of the 4450 calls. And this trade is actually put on for a very small credit. It's put on for about a 2-cent credit, which again leaves me ample upside. But in the event of a big, sell-off in here, what do we really have? Well, we get to keep the 2-cent credit.
Okay. So there you have it. And we look abroad as we have our dollar that's been around 107. Rick, some of your thoughts?
Sure. So for the most part, this product has been trending upwards since we hit these 52-week lows all the way back here, 37.48. We progressed upward here. Kind of this anomaly time was August 5th, like a low point for so many products here due to problems with the Japanese stock market. But for the most part, our trend line matches through a lot of the low points of the data here, barring this kind of outlier period. But, this is a chart where it seems like there's, once again, some very important horizontal levels. You can see between these two red lines right here. First, it was a high point during our rally here. It was eventually eclipsed, but it looked like it became resistant several more times. Then it was where we topped out before we had a gap up. So this area between like 43.80 to 44.20 or so could be an important resistance area. Happens to match up with our yellow 21-day EMA pretty closely here. So that would be one area to watch. RSI trending lower, a little bit bearish right now, going to potentially break out of our trend line though, so we could see a bit of a bounce here. So to zoom in a little bit, look at support and resistance areas. We can see here that if we were to move lower, we would be looking for support at our green line here near 43. Then right here, we've got our purple 252-day EMA and our volume profile point of control lining up very closely. So that could be a significant supportive area to watch. To the upside, you can see our shaded box here. That's the area of interest for Don's trade. That's the area where this trade does not want to be. So that would be, the area where that would lose money. And we would see also as well potential resistance in this area, like I mentioned here. Also, our 63-day EMA, our orange line, is aligned with the top part, so even more weight to that area. But eventually, right here, looking to close the gap near 45.50. That would be another upside point to watch, Nicole.
All right, thank you for that. I mean, when you talk about the upside here, but you're protected on the downside, Don, at the same time. Final thoughts?
Yeah, no, I'm definitely playing both sides in this one because it's a volatile marketplace right now. Yeah, again, my trade is yes, I've definitely looked at some of the technicals, and here I actually tend to agree with Rick that 43 level inside of the emerging markets is probably the make or break. But yeah, I'm looking for that quick pop back to the upside, and again, I think it's actually going to be because the dollar could reverse to some degree. So sell side activity in the dollar actually brings Asian markets up a little bit, lifting this emerging market ETF. It's definitely worth the shot, though, in this kind of volatility.
All right, next up we have Wells Fargo. Some of your thoughts here. This name is hitting highs along with many of the other financials that have done incredibly well. I mean, this has been obviously a great year for stocks overall, but these financials have surprised people of late. Tell me a little bit about Wells Fargo.
Yeah, no, these financials have definitely surprised many of us. Look, I've been in this business a long time, and I know exactly what a parabolic chart looks like. And that right there is what Rick is going to show you is what we define as parabolic. I mean, it is just one way, ever increasing over there. Look, the bottom line over there with this parabolic move, I know it has a lot to do with deregulation. I can also see that the stock has just recently moved from 64 to 78. It's up 56%, but on a year-to-date basis, 56% is enough for me to want to step in and short. But at some point, okay, in the next few days, few weeks, the honeymoon is over. And I think that that's what this is. It's a post-election kind of honeymoon with deregulation. When's anybody going to start talking about the fact that we could see a few $1 trillion cut from the government spending right now, and how's that going to impact some of the financials out there? Nevertheless, yeah, I want to step up and I want to take a bearish position right now. This bearish position is out to the Feb 21 expiration. Again, the Feb 21 expiration. I'm going to be buying the 75 puts. I'm going to be selling the 70 puts. It's a $5 wide put spread for a $1.50 debit. Make no two ways about this. Look, these parabolic kind of moves, I like to step in and like to fade this. I like to step in front of the freight train. I can be wrong, but I've actually got time on my side over here between now and February 21st expiration. I think it's more than enough time to see some of the financials and specifically Wells Fargo have a nice pullback.
Okay. Look, I guess can't keep going straight up, right? Let's see what Rick says about the charts, please. Rick.
Yeah, definitely a very noticeable upside surge here, and I can definitely see the thinking behind looking for a temporary pullback. Long term, it's pretty hard to think of a compelling case against the big banks and the big financial institutions. But we are looking like perhaps we have made some notable progress to the upside. Could be due for a pullback because we are quite close to breaking through our very steep white trend line there that we can see that formed across these lows around when we bounced off our yellow 21-day EMA after seeing a gap up here. And sometimes you can draw these support and resistance line and they fit very cleanly. Sometimes it's more of a general area. This is one of those situations. Look at this blue shaded area. You can see right here, kind of mostly matching up with the highs. There were some highs beyond that point, but they were usually pretty short-lived and didn't make too much progress beyond it. The reason why I kind of chose that area, that's where the volume is. There were some prices that fluctuated outside of that area, but that point around 60 and then just below that 57, those are the big volume areas here. So RSI still on the move to the upside, overbought, still making a higher low here, and also a higher high above its previous high here. So not really seeing a breakdown in terms of momentum yet. Look for our green trend line to be invalidated. Look for a break below that overbought area for signs of weakness. Now, if we were to zoom in a little bit, we can consider, this is the area for the trade in question here between 70 to 75. That's kind of just the strikes shaded. You can see there's volume nodes here and here before we get to our big volume areas. So around like 65 to 70 and like 74. So those could be some congestion areas if we start to slip. +1 standard deviation channel lines up with 21-day EMA near 72. And that's our linear regression line, 1 standard deviation above that. And then to the upside, our +2 channel comes in near 78, 73. So those are some areas to watch for now.
Okay, and it's interesting that you talk about volume too. Obviously, we're probably going to see some volatility here, lighter volume, half day Friday, off Thursday. But you watch where the volume is, also shows conviction sometimes. John, thoughts?
Yeah, no, again, I have to go back to the idea here, like this election, did it really change anything fundamentally inside of Wells Fargo or any of the other financials? And the answer to that is Probably not. Again, some degree of deregulation over here, but it also depends on how you view the Fed at this point. So what are we doing? We're cutting right now. So we're seeing what interest rates actually start to pull back to some degree. In just the last couple of days, we've actually seen even the 10-year start to come back off a little bit on the rate. And yet the financials just continue to smile and fly a little bit higher over here. Again, I like the opposing side of this trade all day long. If there's ever going to be a time to be a contrarian, it's right now inside of those financials.
All right. And here, you know, as we look at this, let's get to next one up is Starbucks. Some of your thoughts here. I mean, it had gap down on earnings, a gap up after earnings. I mean, it's been all over the place, but did hit a high of 103 recently. What are your thoughts here?
Yeah, well, we all know that the gap higher in Starbucks is based on, what I term guacamole Brian. So guacamole Brian, for those of you that have absolutely no idea, what I'm referencing here is Brian Nickel coming over from Chipotle and did the turnaround, obviously, in Chipotle. I happen to reference him as guacamole Brian. Look, obviously, okay, he's got experience. Maybe he can actually work some miracles, but not that fast. It's just not going to happen that fast. I think the turnaround story inside of Starbucks is going to be a rather long one. And this is completely anecdotal, but I go into the Starbucks right now, and it's not exactly where I want to even sit down and have a cup of coffee, much less buy a cup of coffee right now. So I think that's actually going to be a bit of a longer turnaround story. So if the stock starts to cross back under 100, I think it's actually going to get pushed back all the way into the low 90s. So as such, I'm actually going to take a bearish position here as well. I'm going to go out to the January 17th expiration. I'm going to be buying a 97.5 put. Again, buying a 97.5 put, selling a 92.5 put. This is done for $1 debit. So I'm risking about $1. Okay, we're on a $5 wide spread here, looking for Starbucks to cross under the 100 level and continue to push right back down into those low 90s.
It's interesting because on the 26th, Wells Fargo put the overweight at $115 target. So they're feeling more optimistic. And this was yesterday that they were putting this out, but you're talking about the potential for a pullback. But as you noted, he's had a nice run up of late, so maybe has that room to do so. Rick, can you take a look at the technicals, please?
Kind of an unusual chart. There's two very distinct areas of interest from my perspective here. And we had this kind of really rough quarter, this kind of odd W-shaped price action here where we had two large gaps. First being a gap down, second being a large gap up that pretty much took us to where we started, actually even a bit beyond that point, and kind of kicked off this rally that's been mostly contained within this upward sloping channel, our two white dashed lines there. And you can see this area around here, kind of between like 93 to 97 or so. That's where most of the volume is, kind of matching up with that area back here. Actually, I could have even extended this green line because it kind of matches up with these old highs around there as well. So a key area there, and also this area down here. This was another heavy volume area. You can see between like 79 to 72 or so. That was where the key points were. But up here is more important for right now, though. We can see that RSI is kind of not having a great strong momentum move here, but we can see it's at least trending upwards still. We've got our green trend line still in play, not really making a lot of progress beyond the previous high points that we established, but also you could say at least our red downward sloping trend line has been broken. Now, if we were to zoom in a little bit and look at some support and resistance areas, we can see here we've got, first of all, our highs 103.32 plus 2 standard deviation comes to 106.43. To the downside, +1 channel, old highs, yellow 21-day EMA between like 98 to 99 here. Then our shaded area, Don's trade area of interest once again here, including our 63-day EMA and our volume profile point of control. That would also represent kind of a break out of our trend line, and for this trade, it would want to break below that green line as well, if I'm not mistaken.
Thank you for that. A great chart there. Thank you, Rick Ducat, on the charts, on the technicals. And your final thoughts here, Don Kaufman.
Yeah, right now I'm obviously selectively bearish inside of this marketplace, but overall, look for some of the election honeymoon to ultimately fade. And look, I know that people are thinking about the Santa Claus rally right now, but it looks like that already persisted and already broke through in the marketplace. So be a little careful moving forward. We're getting some odd movement, obviously, inside of the bond and treasury markets right now. Again, be selectively bearish and take those bullish trades and possibly take some profitability in a few of those bullish trades coming into the end of this year.
All right, thank you. Good to see you both, and happy Thanksgiving, Don Kaufman and Rick Ducat. Thank you for the big three.